Hello, fellow Ghost Traders. Another great week in the market for our Ghost Trades teams and students. On our daily live trades, we had a great week. We did multiple trades and did 2.53% return for the 2 days of trading Thursday and Friday. That was spectacular. Now, not quite as spectacular as our 37.06% for the same days last week, but we can't always be hitting grand slams every week. 2.53% is amazing considering 2 days of trading nearly equaled a 6-month return on a mutual fund in a good year. When you consider that, we had an amazing week and hit our weekly goals. Additionally, our trade signals did 5.75% for the week, bringing our weekly total to 8.28% between our signals and our shadow trades. We traded the SPY, the Qs, we traded Adobe, we traded Meta, we traded NVIDIA, Microsoft, Apple, Snowflake, John Deere, Lulu, and more. Okay, so we had a wonderful week. Now on to the update of the week. The market was overly exuberant with the news of the debt ceiling increase in performance numbers from last week. The major and unexpected bullish run of Thursday, June 8th, led to a fairly passive Friday finish. No other major economic news was released to stymie the run. Year to date, the S&P 500 is up 20% from its October 2022 lows. The NASDAQ is up 27% since October, and the Dow Jones is up 16% in the same time frame, indicating the potential for a new bullish market. We could also just be in an extended bear run rally. Either way, we're going to make history over the short term. The reason is because this movement is nearly unprecedented and will ultimately become either the longest bear market rally in history or one of the weakest beginnings of a bull market run in history. Only time will tell which one it's going to be. Now, on to this week. The waiting game will be whether the Federal Reserve decides to hike rates again to slow this runaway train or let it run. This will have a major impact on the market this week, despite the resiliency the market has shown to the previous rate hikes. This resilience that you're seeing is due to savings accumulated during the pandemic, of which over 60% is now depleted. Also, pent-up demand for services and a tight labor market. Those three things. Any relaxing of this trifecta can break the resilience of future rate hikes and threaten the recent rally. Upcoming consumer price index report due out tomorrow and FOMC information at the meeting are likely to set the tone for the remainder of the summer. The CPI data will lean heavily on the Fed's rate hike decision. However, the current sentiment is that the Fed will leave rates where they are for now. Look for that to change if the index reports give reason for a mind shift. Also due out before FOMC meets is the PPI and retail sales reports, which could also weigh on the Fed's decision. As of this release, CME FedWatch gives a 75% chance of a rate hike pause, but gives a 66% likelihood that another rate hike will resume in July. On specific stocks, Netflix had a great end to last week as analysts doted over the better-than-expected acceptance of their new ad revenue program. Tesla also continues to be a strong bull in the wake of the Ford-Tesla charging agreement and the news of a sub-$35K Tesla EV. NVIDIA and Lulu gave up some of their massive gains on earnings from the week prior. Many retail stocks continued to take a beating as crude oil failed to recover as crude production reached highs not seen since April 2020 from both Russia and OPEC. Now, looking to this week, the market is not acting rationally. We're in extreme overbought territory, and all indicators are looking for a bearish retracement. However, do not overestimate the power of greed. The CNN Fear Greed Index is still showing extreme greed. Be careful on your bullish positions and be prepared to transition if we move below that into the greed or neutral positions. The market may very well continue its bullish rally and push even higher based on the positive news from the financial reports and the Fed meetings, but also be very wary of the bearish indicators that will ultimately prevail either at the end of this week or into next week. That's it for this week, fellow Ghost Traders. As usual, we'll be trading live on Thursdays and Fridays, and we will see you at our weekly meetings. Have a great week and make today your masterpiece.